Hello and welcome to our modern money journey. Just a brief reminder that I am not a licensed professional. This is not investment advice. This is for entertainment purposes only. Hello everyone and welcome back, all 5 people that watched the Build a Portfolio episodes. This is episode 13 of the Build a Portfolio series, where every single month I deposit $100 into Webull, we take a look at the markets together, and then I make a purchase to add to my portfolio. So today actually marks 1 year that we've been doing the Build a Portfolio series. So let's take a look at the account together. Let's take a look at the portfolio and see how we've done over the last year. So let's first just look at our net account value. We have put in $1,300 and we have almost $1,600. So we've made 263, almost 264 through trading. So we would have to close out all of our positions right now and we would make $264-ish, which is all of these minus all of these. These are all of our gains as they stand right now on our positions. And then these are our positions that have losses. And we've also earned about $10 or $9 in dividends. So we have not put all of our money to work. We still have buying power of $487, but the cash that we did put to work generated us an annual return of almost 45%, or we'll say 45%. So on what we put to work, we got 45% return on, which generated us nearly a 20% return on our total account value. This has been a really good year. We can see that our Ethereum and Bitcoin positions are mainly what's carrying the bulk of our gains. This should be no surprise. We talked about how you want to build your portfolio with lots of safe assets and then a small portion of some risky assets that could potentially generate high returns. These are our risky assets that are generating us high returns. Some of the genome editing companies that we picked up recently have entered into our top gainers, top couple of our positions that are giving us good gains for our portfolio. And then, as always, Barrick Gold and SLVO are what's holding us down, but we know that these are almost inversely correlated to everything else. And we're earning dividends on both of these. So let's talk about the coming year for the Build a Portfolio series. We have a lot of our risky plays doing tremendously well, a lot of our tech plays in our genome therapy, which I'll almost consider a tech play in itself, doing really well. We need to start moving back towards building some of that safety net, some of those safe dividend yielding, cash flow producing companies. We need to bump these numbers up a little bit, so to say. So let's take a look at the markets and then we'll come back and we'll make a purchase and start that progress towards adding some more dividend generators to our portfolio. So today, crypto is up a little bit. Bitcoin's up about 1%. Ethereum's up 2%. XRP's down about 1%. But for the most part, we're mostly green, but this is just for today. Why don't we switch over to the last month so we can see where things moved since last month when we were looking at prices. We are up massively from the dip that we were taking over these last several months. So we started moving back up in the cryptocurrency space. I believe that we're in the second half or starting the second half of the bull run. So the first half is usually more calm, and then a little bit of a quick rise followed by a steep correction, which we just had a 50% correction. Bitcoin was at 60,000, came clear down to 30,000. Ethereum was at 4,000, a little over 4,000, and came clear down to a little under 2,000. So we had a little bit over 50% correction, and now we're climbing back up, looking to regain those old all-time highs over the next couple weeks. We'll probably consolidate once we break through them. We'll probably go up past it, consolidate for a while, and then continue climbing. I still think we'll see Bitcoin near 100,000 at the end of the year. I still think we'll see Ethereum hit close to 7,000 to 8,000 near the end of the year. And yeah, things are looking good. It's playing out sort of like we always knew it would, or suspected that it would. But let's head over to the traditional markets. I'm taking a look at the S&P 500 index. Things are still just chugging along. We're down a little bit today, but nothing serious. Same with the Dow Jones. We recovered from what was looking like might be the start of a correction. We've just kind of kept chugging along in this, straight up pattern. Gold, interestingly, over last month did this kind of drop and then sort of hook back up. If we just check out the 1 month chart, you can see it more clearly. So it was flat and then dropped, and then it's coming back up. And if we go back out to the year and go to silver, we can see silver did the same thing, but its drop was more dramatic, as silver is always its moves are always a bit more pronounced than gold's are. It's a little bit more volatile than gold, which is why usually when gold has a huge run up, it's best to get into silver because it will move later and much more extreme. Its move will be much more pronounced. But that also leads to much more pronounced drops as well. Alright, and then going over and looking at the we need to go to currency indexes. US dollar, we can see we sort of had a drop and then rise back up as well, just sort of like gold and silver did over the last month. If we go to the last month, we had a drop and then rise, and it looks like it might be starting to drop again. But we know that we're not dollar bulls on this channel by any means, because we're well aware of what happens when you print $7 trillion or $9 trillion out of thin air. We know that that can't possibly lead to the value of that dollar going up. So this is just short-term noise. But alright, let's get back to the portfolio. And let's go to the trading tab so that we can take a look at what we're going to add to the portfolio today. So we're going to add Omega Healthcare Investors. It is a healthcare REIT. They own healthcare facilities all over the United States and the United Kingdom. They own multiple different types of healthcare facilities. They're not specific into just skilled nursing or just elderly facilities or primary care facilities. They're a mixture of different facilities and a mixture of geographical locations. So this should be relatively safe. I've looked at some of the financials. We're not going to go over them here, but in comparison to some of the other healthcare REITs, they are on the safer side. They're not too much, too high for, a price per share. Their PE is not ridiculous. Their PE ratio is not ridiculous. Their price to book ratio is not ridiculous. Their dividend payout is good. The yield is a decent percentage, and their payout ratio is not, dangerously overextending themselves. So I think they should be a relatively safe dividend yielder for us for a long term hold. So at we've seen a little bit of a decline from its recent highs of around, almost into that $40 range. We'll say $38, $39 range. So we could see, if it climbs back up there, we could see an almost 20%, price appreciation while getting that dividend the whole time. And who knows, we could go even higher depending on how much money gets pumped into the system, a lot of which is going into the healthcare system because of the ongoing global situation, we'll call it. So let's go ahead and switch this to a buy. Let's go ahead and do market. Let's go ahead and do 2 shares. And we'll place that order. And we'll buy. And our position's been filled. Let's go back to our account. And let's go to our positions. And here we go. We have 2 shares of Omega Healthcare Investors, OHI. Alright, all you bulls and bears, we'll see you next time.